Secure Loans is a service offered by IOU Notes that allows users to leverage their own funds to obtain small loans for personal and business use as needed and never pay more than 5% interest per year on those funds. Using our service, a user can have a dependable emergency loan option, help build or rebuild their credit, budget their money better, and stop paying high interest fees from other loans. This service was created because of the scarcity of affordable small loans. According to many studies, the average American does not have $1,000 in their bank account to cover an unexpected bill. That means in the event of an emergency expense, vehicle, housing, medical, etc., if family or friends could not help, the average person would have to rely on high-interest credit cards or payday loans. Most people do not think this far in the future and don't calculate the amount of wasted funds they spend on loan interest and related service fees. In addition, if people only have a small amount of funds in their bank account, they will not want to use it for purchases, since it is very hard to return funds back to their account. Even if people got a windfall amount of funds, such as from a tax rebate, most will end up using it on new purchases. The temptation to spend new funds is easier than saving it, but people are more likely to pay loan payments or some other bills because they have to. Financial institutions, banks, credit unions, lenders, and larger companies who have the resources provide loans to others and decide the terms. Credit cards have high interest rates up to 29% APR, annual percentage rate, plus late and other fees. Payday loan APRs can total 400% or more when all the fees and interest are factored in. With IOU Notes Secure Loans, everyone gets approved. There are no credit or income checks because each loan is secured by that person's own funds. Using our platform, the user can get the best loan terms of 5% APR, select from 1 or 2 year repayment options, and not have to worry about any hidden fees or terms. A user cannot borrow more than they have submitted to the loan program. A user can move funds into their IOU Notes account so they will have it when needed. Then, when a user needs a loan, they can use our platform to generate a loan between the user and IOU Notes. A user may take out as many loans as wanted as long as the funds are in their IOU Notes account. When a loan is paid back completely, funds are returned and available immediately to the user. In addition, we report it to the credit bureaus and users' FICO score will improve over time. Also, users' IOU Notes credit score will improve, which will help with our peer-to-peer services. IOU Notes Secure Loans versus credit cards and payday loans comparison of $1,000 borrowed. IOU Notes Secure Loans. User borrows $1,000 at 5% APR and has 1 year to pay the loan back. Total loan repayment of $1,050, $1,000 in principal, $50 in loan fees. Credit cards. User borrows $1,000 at 22.21% APR, national APR average, and has 1 month to pay the loan back. If it took the user 1 year to pay completely, then the total loan repayment amount is $1,248, $1,000 in principal, $248 in loan fees. The majority of credit card issuers compound interest on a daily basis. That means the interest is added to the original loan balance at the end of each day. Payday loans. User borrows $1,000 at 400% APR, national APR average when you factor in all of the fees and interest, and has a few weeks to a month to pay the loan back. Average payoff time is 5 weeks. Total loan repayment is $1,493, $1,000 in principal, $493 in loan fees. Get started today with your free account. Sign up now at www.iounotes.com.